Good morning. Welcome to Trading Hour. I'm Reema Tendulkar with Mia Sonia Shenoy and Pavitra Parekh, and it's a tepid-looking screen as we speak. We're down more than 100 points on the Nifty. The Nifty opened up in the green. It went up to levels of 18,240 thereabout, but since then, markets have taken a leg down, and right now we're closer to that 18,100 mark. So snapping a two-day winning streak for our markets, and it's fallen in line with the weakness that we had across the global markets. Mid-caps are under pressure. The advanced decline ratio weak. Currently, one stock in the green for nearly two in the red. The global facing sectors are under pressure. So something like metals as well as IT. These two sectors have taken a knock today. The Nifty metal index is down more than 1%, while the Nifty IT index is now inching towards a 1% fall. Metals have also extended the fall, now down 1.5%. The Asian market picture right now at least is a bit mixed. Hang Seng Korean markets, Chinese markets in the green. But on the flip side, the Japanese markets continue to remain under pressure. So that's down close to about 1.3%. An important macro update, India's December services PMI data has come in very strong, 58.5 for the month of December, the highest since June of 2020. So this year-end travel and the requirement for services in the month of December has boded well. But tonight we will get the US ISM manufacturing data, and along with that, the December FOMC minutes. So these two data points will be crucial as Wall Street opens up for its second trading day of the year. Hi.
Hi, morning. I guess it's one of those days when, you wake up after a partying for 2-3 days, and you wake up with a big hangover. It's like the US markets has woken up with that hangover, and then that sort of spread to most global markets, right? I mean, that seems to be the focal area this morning. As you said, it's, metal, technology, oil and gas, all these pockets are under pressure this morning. A couple of levels that I'm watching, the near-term resistance perhaps on the upside is this 18,660 level, which is the last peak that we hit, the closing peak that we hit on the 14th of December. We haven't been able to get past that. So perhaps, that is a near-term resistance that the market is watching out for. And the global data is weak, whichever way you cut it. I mean, the US PMI fell, you had Tesla which fell, Apple was under pressure, earnings are looking weak. Brent crude has fallen further, so now it's up to $82 a barrel on demand concerns. But back home, there's still some pockets of outperformance. So whether it's something like an Axis Bank that is sitting at a fresh lifetime high, and even the new listing has not done so badly for itself, considering that it was undersubscribed. Radiant Cash is up 9% now post-listing. So a lot of things to talk about in the next 1 hour. But I guess, this hangover is going to remain for some time now.
I guess so. And there are some big cues lined up as well, right, from the global market. So it will be a lot about that. You spoke about what's under pressure, which is IT and metals. What's holding up relatively well in this market is some of the pharma names. Of course, they have been underperforming in the past week. But today you have the likes of Sun, DVs doing well. Insurance after the run yesterday is once again doing well. So take a look at SBI Life. You have, HDFC Life, LIC. These are just a few of the names, but pretty much that entire basket is in the green. It is a lot about the financial updates. We'll talk more about that in just a bit. And in terms of the cues that we were talking about, the FOMC minutes today, you have the jobs report on Friday, and of course, Brent at 82, slipping, 3% overnight is a positive for us, but let's see how that really moves from here. So that's what we're tracking in terms of the market action. Before we get started on the show, let me run you through everything that we have lined up for you. Stocks open largely weak, tracking global cues. Mid-caps underperformed today. To discuss the market outlook and the road ahead, we will be joined by Sunny Agarwal of SBI Securities.
All right, and we will also focus on some important brokerage commentary on how they expect 2023 to be for banks, the tech sector, industrials, and oil marketing companies. That happens later on the show.
We will be joined by the management of High Tech Pipes to discuss the company's third quarter business update and what they see going forward. So that conversation lined up in just a bit.
And finally, as part of our special series, Fin Street, we'll be getting you a deep dive into everything that you need to know about securitization. All this and much more in the next 60 minutes.
But let's begin Trading Hour by focusing on brokerage commentary on the outlook for various sectors. We'll start with some important opinion on emerging market equities coming in from Venugopal Garre or Bernstein, who says India outperformed among the emerging markets and emerged as the lucky lack of choice market for 2022, with macro resilience being the key word amid global challenges. He says while global macro risks appear to be peaking, moderating macro buffers for India raise vulnerabilities in 2023. He adds, While a mean reversion will drive underperformance relative to China this year, India's early cycle nature will remain a crucial variable in dictating absolute returns. At the sectoral level, they are overweight on financials, they stay overweight on IT, but they are allocating some weight to digital themes, which appear to be more reasonable post the correction. They're also overweight on cement and move to an overweight on durables. They remain underweight on utilities, metals, FMCG, and they're moving to an underweight on industrials as well. They say they're equal weight on autos.
Okay, so let's talk about sectors then and what you should be focusing on. Of course, banks was the big theme of last year, but CLSA expects 2023 to be a strong year for banks as well. So perhaps an encore. Abhishek is here filling us with all the details. Abhishek, what is the incremental upside that CLSA sees on banks?
Well, Sonia, to begin with, CLSA says that, 2023 could also be a strong year for the banking sector, especially the H1 CY23, that is the first half of the next this calendar year. So margin would only normalize from H1 CY23, which we have also highlighted that the net interest margin could peak in Q4 FY23. So they expect large cap financials to have a lot of OPEX flexibility in next 12 to 18 months. Remember that, we have been highlighting that large banks had made OPEX over the last 4 to 6 quarters, which would pay reward going ahead to them. So overall, they expect peak ROEs to sustain in FY24. Axis Bank is the preferred top pick, followed by ICICI Bank and SBI. They have upgraded IndusInd Bank to buy from outperform, raised the target price to 1500 per share. They have downgraded Bank of Baroda's rating to buy from buy to outperform. However, target price remains at 210 per share. Back to you.
All right, Abhishek, thanks a lot for taking us through the highlights of that report. So perhaps 2023 would be another good year for the banking space. That is the word coming in from CLSA. But from banks, let's move on and talk about tech. JP Morgan has written an interesting note on what they expect for the IT sector going forward. Rima, tell us more about this.
Well, they've titled the 2023 Outlook Report on IT as the Great Reset. So for starters, they're saying that growth rates for the Indian IT companies will come down from mid-teens to 6 to 8% for calendar year 2023 and 2024. This reduction in growth will be on the back of higher furloughs, as we are seeing, flat technology budgets in the current year, inflation, large deals are not coming. Without large deals, it's hard for large companies to see a double-digit growth and pricing pressure as inflation continues to eat them. Secondly, JP Morgan has also heard, in their conversations with various industry experts and companies, there is a possibility that the furloughs that we saw in Q3 will extend into Q4 as well. That's another point. Thirdly, so while growth will slide in calendar year 23 and 24, what they're saying is that it's not that after that, 25 onwards, things are going to pick up because there are a lack of any new disruptive tech drivers beyond digital cloud adoption cycles. So according to them, growth rate from here on is going to remain very moderate. And also, if you do not have a top line growth, it's hard to grow your margins because companies lack operating leverage. So it's going to be hard for companies to recover the margins that they've lost in the year gone by. Also, they're saying that in the current quarter, Q3, FY23, if companies report weak numbers, you're going to say, well, it's on the back of furloughs and things will recover Q4 onwards. But they're saying that Q4 is also likely to be weak, and then come April, May, June, when you will get the guidance from the companies for the next year. They expect that is also going to remain fairly muted, and that is going to drive a PE correction. So Q3 you could discount, saying that it's the furloughs, but if you get weak numbers, which they are anticipating in Q4, and they're saying that in April as well, when the guidance from the next company for the next year comes out, it's going to remain weak. It's going to drive a PE reset downward, PE downgrade. And look at where the valuations are versus the pre-COVID average valuations. Valuations are still about 20-30% higher than what they were, and according to them, that is going to come down. The PED rating is likely to pick up in the next 6 months. They're underweight largely on the entire sector. They've got a neutral call only on Infosys and Tech Mahindra, and in all the other places, you would see that the target price set by JP Morgan is lower than where the stocks are currently are. So for TCS, the target price is 3,000. For HCL Tech, the target price is about 880. So that's the outlook coming in from JP Morgan, the Great Reset.
Okay, let's see how that shapes up. Meanwhile, Jefferies expects the operating leverage to continue to surprise for industrials in the year ahead. Vivek is here to give us all the details. Vivek, this seems to be the common narrative, right? That industrials, manufacturing is going to pick up. But tell us what Jefferies is saying.
Absolutely right. The private capex picking up or the private capex revival. And also, if you saw in 2022, what was actually a consensus overweight was the industrial space, mainly consisting of companies that had a large presence as far as the capital goods space was concerned. So what is Jefferies saying in this particular backdrop? They're saying that 2022 actually saw significant earnings upgrades as well as robust order flow as far as most of the industrial companies were concerned. So they're saying in 2023, the operating leverage that these companies enjoy should continue to surprise on the positive side. And however, one thing that they are flagging out is that the order flow growth that they saw could potentially slow down. They are saying that the sub-segments that they are more positive on in 2023 are the power T&D space, the railway space, data centers, as well as logistics. However, one potential red flag that they are flagging off is the fact that in budget 2023, there could be some commentary that indicates that capex could slow down, and this they are saying is a big red flag. Which are the stock picks that they like at this point of time? So L&T, Siemens, and Thermax continue to remain the top picks as far as Jefferies is concerned.
All right, Vivek, thanks a lot for getting us that report on industrials. And finally, the next one we're looking at is that Citi expects policy factors to favor city gas distributors as well as gas transporters in 2023. Mangalam, tell us more about this.
Well, Citi expects policy and regulatory factors to favor city gas distributors and gas transporters in 2023, like you pointed out, and it's the macro driver which could be a bigger driver, the macro backdrop, so to say. The key thing to monitor as per Citi for oil marketing companies is revised APM prices and any change in allocation towards that. They believe for GAIL and Petronet, pipeline tariff review will be a big trigger. KG gas auction in Jan will be another one. We'll also watch out for crude price trends because they've been volatile and open 90-day positive catalyst, and they've initiated 2 pair trades as well. As far as oil and gas outlook for the year is concerned, they have an overweight rating on GAIL. They believe there is an underweight rating case for Petronet LNG. BPCL is an overweight, whereas Indian Oil is an underweight as well.
Okay, well, to all of you, thanks a lot for joining in and helping us with what the brokerages are saying with respect to individual sectors. A lot of optimistic views there. Let's slip into a quick break. When we come back, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Do stay tuned in.
Many challenges right now around the world. In fact, India is probably the exception. There are parts, India, Middle East, Latin America, some of the other parts of Asia are the things that are green. And I think Europe and the United States are going to be challenging. The United States, not yet, but I think 23 will be much harder.
How do you read what's happening with the way that the markets have corrected, specifically the tech stocks, and what that signals?
If we believe software and digital infrastructure is going to be important in construction, in energy, in manufacturing, long term, then you have to be long on tech industry. But will we have to go through our own cycles around productivity? Absolutely, like anybody else.
आज तबीयत ठीक नहीं लग रही, तुम ही सब काम निपटा दो ना। अरे टेंशन किस बात की? सेंचुरी एमडीएफ का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहाँ नो टेंशन वहाँ।
Low emission premium plus by Century ProWood.
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC.
LIC's annuity plans give 10 annuity options and flexibility in receiving regular income. LIC, हर पल आपके साथ.
तुम तो मेरी रोशनी हो।
तेरी रोशनी हूं मैं, किसना?
Sa Polymers Limited. IPO of 1 crore 2 lakh equity shares of face value of 10 rupees each with price band of 61 rupees to 65 rupees per share. Offer opens on Friday, December 30, 2022 and closes on Wednesday, January 4, 2023. For risk factors and details, please refer to the offer document available on the websites of SEBI, Pantomath Capital, the book running lead manager and the stock exchanges.
Hey guys, welcome back. You're still tuned into Trading Hour on CNBC-TV18. For the market, we have slipped significantly from the opening level. So we're currently around 125 points in the red. So let's now also talk about what's going on in the world of commodities. We have Manisha joins us, and today she's focusing on the overnight moves that we've seen in the Baltic Dry Index. Manisha, tell us about that.
Oh, well, yes. We've started the year with the weakness in energy space, decline in metals as well. Iron ore has declined, so has steel. So that clearly shows in case of the Baltic Dry Index as well, where the sentiment clearly has soured. So when you look at the prices itself, we saw a plunge of 17.5% in the overnight markets there. This is the biggest one-day decline that we've seen since 1984. The year 2022 also wasn't so great because we saw 31.7% of a decline in that year as well. And that has been the worst yearly decline that we've seen since 2015. Just to break it down, when you look at the single-day drop, well, this has been a record one, and we've seen it now at the lowest since November 24th, that is. So within Baltic Dry Index, you have seaborne dry commodities that are shipped across the world. So when you look at the freight size here as well, the Cape Size Index, which actually tracks and follows coal and iron ore trade around the globe, has declined 27.7% in the overnight markets. And Panamax Index, which tracks coal and grain trade, has seen a decline of 6.3% as well. Well, we have seen the index continue to decline since the Russia-Ukraine war, but the weak Chinese data with the winters approaching and the recession fears, there has been a big dent that we've seen come in for the Baltic Dry Index yet again.
Thank you very much for that. From commodities to equities, back again. Business updates coming in from the BFSI space, and now it's from HDFC Bank and Yes Bank. Abhishek is here joining in with the details. Abhishek?
Well, Rima, HDFC Bank has actually disappointed on the loan growth front. So to begin with, deposits are up 19.9% YOY and about 3.6% quarter-on-quarter. Now, we are seeing this transition happen with every bank that retail investors or largely who had CASA deposit franchise, they are moving away in a rising interest rate scenario from low cost or, low interest earning CASA deposit to higher term deposits. So CASA in absolute value is up just 0.5% quarter-on-quarter. The CASA ratio is at 8-quarter low of 44%. Now, loan growth, that's disappointed. It's up 19.5% YOY, perhaps the weakest in last 4 quarters, and it's up just 1.8% quarter-on-quarter, which means that they have lost out on market share on a sequential basis, and it's the weakest growth in 6 quarters, maybe led by the fact that, a corporate book might have declined on a sequential basis. So, X of pool or the agreement of loans that they have with HDFC Limited, the loan growth is at 19.5% YOY and about 1.9% quarter-on-quarter. Their credit to deposit ratio, that's declined sharply and is at 5-quarter low of 86.9%. So you can see some net interest margin compression on a sequential basis as and when they release the results. Yes Bank, it's a mixed bag given the fact that deposit growth is pretty robust, growing at 15.9% YOY and 6.8% quarter-on-quarter. The CASA has also held up well, growing at about 14% YOY and 3% quarter-on-quarter. The dip in CASA ratio is just 10 basis point quarter-on-quarter. Advances growth, that continues to remain weak and they have lost market share both YOY and quarter-on-quarter. The YOY growth is 11.7% while sequential loan growth is a little more than 2%. Liquidity coverage ratio, now that's improved quarter-on-quarter to 119.5% when compared to 105% in the previous quarter. Back to you.
All right, thanks a lot for that, Abhishek. Let's slip into a quick break on that note, but when we come back, we'll talk more about the markets. Which, by the way, is still down quite a bit. I mean, down over 120 points, so no recovery really. Mitesh Thakkar of earningwaves.com will be joining in to give us some top trading bets for the rest of the day. Stay tuned.
separates a good CEO from a great CEO? CNBC-TV18, in partnership with McKinsey, has arrived at a definitive list of India's top CEOs. And the first CEO to make our shortlist is... TV Narendran took over as the MD of Tata Steel in 2013 when the company was in danger of a collapse. Today, Tata Steel is the most profitable company in the Tata Group.
A company which only talks of its past has no future. And I think Tata Steel, sometimes we used to talk a bit more of the past than we needed to, or rather we are proud of our past, but were we talking enough about the future? Were we thinking enough about the future? Were we, kind of indulging ourselves more than required in the past? I mean, the past was something done wonderfully well by many of our predecessors.
The Winning Mindset, the CEO Guidebook, only on CNBC TV18.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
Our success reflects your trust. Global business crosses rupees 20 lakh crore. Thank you customers, stakeholders and well-wishers. Canara Bank. Together we can.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
The future's her. For me in my life, even the past has been her and the present has been her as well. Women are way better anyway.
Because women are an unstoppable force.
They're more compassionate, more emotionally aware, intelligent.
They're rewriting the rules, redefining the power equations and reimagining a more just, a more beautiful world.
A mega initiative to make gender parity an attainable reality. HSBC presents CNBC TV18 Future Female Forward, the Women's Collective.
सब ठीक है ना?
अपॉर्चुनिटी मिस हो गई। स्टॉक खरीदा था, फंड नहीं है।
तो ICICI डायरेक्ट का बाय नाउ पे लेटर ऑप्शन क्यों नहीं ट्राई करते? अपॉर्चुनिटी दिखे तो स्टॉक्स खरीदो, मार्जिन फंडिंग करके बाद में वापस कर देना।
करो तो ICICI direct करो. Investments in securities markets are subject to market risk. Read all the documents carefully before investing.
Welcome back. Well, the market is under pressure. So we have Mitesh Thakkar of earningwaves.com to tell us how one should approach the rest of the day. Mitesh, hi, good morning. Once again, we were just discussing during the Bazaar show that perhaps this market could break on the upside. But lo and behold, the market has decided not to oblige. Do you think there's more pressure on the downside now after what you've seen today? And what do you do with individual stocks?
I think, one, yesterday's closing was just below 18,250, which was the breakout level. But I still waited, to buy into the index because the hourly close about 18,250 would be some kind of confirmation of a breakout. That didn't happen, which means that we are back to the range. So I think it's 18,000 to about 18,250 for the time being. And yes, I think, marginally what we've done is that I talked about that at the earlier show as well, that we've cut down on the stock long exposure because the breakout isn't happening and we've kind of explored some shorting opportunities. So I think Coal India is something which is come on radar. It's broken down nicely. So that's a sell with a stop at 221 for targets of 210. And the other one is Aditya Birla Fashion Retail. That's also slightly turning negative. So keep a stop at about 285 here. Look for targets of 270.
Okay. Thank you very much for that. The Nifty is still in a trading range of 18,000 to 18,250. Get into a very short break on that note. On the other side, we'll invite the management of High-Tech Pipes. They released their Q3 update recently. The company recorded their highest sales volumes in the quarter gone by. So more details on that with Anish Bansal.
SA Polymers Limited. IPO of 1 crore 2 lakh equity shares of face value of 10 rupees each with price band of 61 rupees to 65 rupees per share. Offer opens on Friday, December 30, 2022 and closes on Wednesday, January 4, 2023. For risk factors and details, please refer to the offer document available on the websites of SEBI, Pantomath Capital, the book running lead manager and the stock exchanges.
ठंडी चाय हमारे पास बादाम है, किशमिश है, काजू है, अखरोट है। तुम्हारे पास क्या है? मेरे पास सेलो है, गर्मा गर्म चाय।
सेलो वैक्यूम स्टील की थर्मोसील टेक्नोलॉजी रखे गर्म को गर्म और ठंडे को ठंडा 24 घंटे। सेलो वैक्यूम स्टील फ्लास्क।
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family. Am I right?
Let's close the deal.
Thank you.
Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
Bonjour, mon amour, t'es bizarre sous la pluie. En ce jour, on s'est étreint. À notre tour, oh mon amour. Aimer un jour et s'aimer pour toujours. Louis-Philippe Sheen.
Welcome back. Let's shift our attention now to a corporate. We are focusing on high-tech pipes. The stock is down 1%, but earlier this week, the company reported or released their Q3 update, and the company has announced that they've seen the highest sales volume in the December quarter with a growth of over 40%. The stock is flat today, down 1.3%, but in the last 1 year, it's seen a growth of close to about 55%. We're now joined by the company's executive director, Anish Bansal, on the show now. Anish, morning. This is Reema here, and thanks so much for joining in, and Happy New Year. You've started off on a strong note. Could you give us an indication now what the FY23 sales volume growth for the company will look like?
Hi, Reema. Good morning. Happy New Year to you too. So basically, in Q3, we have done a volume of 92,000 tons. This was against a volume of 65,000 tons in Q3 FY21 volumes. This means a growth of 40%. This was primarily led by the strong demand from the infrastructure side, Jal Jeevan Mission, high-speed rail corridors, 5G telecom towers, solar energy, and so on.
Okay, so what about FY24? What are you targeting in terms of volumes for FY24 since demand is so strong?
So FY24, our internal target is to take the volumes to 5 lakh tons, which will almost be 25% jump from our existing volumes.
Okay. And FY23, what's the target?
Close to 4 lakh tons. Close to 4 lakh tons.
Okay, got it. Hi, Anish. Good morning and thanks for joining us. This is Pavitra. You also commissioned your facility in UP. So can you tell us, after the commissioning of that facility, what the total capacity stands at for value-added products?
Hi, Pavitra. So color coating line is a new vertical for the company. Basically, the applications is into the roofing, cladding, furniture, and doors and windows industry. This is a new product for us, and we are quite optimistic about this. With the new color coating line, our capacity of value-added products will be close to around 150,000 tons. So that will be almost 35% of our total product mix. And going forward, once the utilization and the ramp up happens, and we are hopeful to take this capacity further by FY24 and FY25.
Further to what? From 35% to what?
35% to 50%, the total share of value-added products in the basket.
And when do you think that will happen?
By FY25.
By FY, okay. Can you tell us what is the difference in the EBITDA per ton in your value-added products and the non-value-added products?
So typically, there's a difference about 2,000 rupees per ton. The normal products they get a EBITDA of around 2,500 to 3,000 rupees per ton, and the value-added products they get the EBITDA between 4,500 to 5,000 rupees per ton.
Okay, so 5,000 rupees per ton in terms of an EBITDA. Can this be expected by when? By FY24?
By FY25.
By FY25, you're looking at 5,000 rupees per ton, all right. Can you tell us, in terms of the debt, I think you have a little over 300 crores of debt on your books, if I'm not wrong.
Yeah, that's
do you
right.
plan to bring it down in the near term?
So our internal target is to make the company net debt free by FY25. A lot of capex that has happened over the last 4 to 5 years, it has come to a close end. And once the generation and the internal accruals they take place, I think we should be net debt free by FY25.
This net debt free status will be through internal accruals only. You won't be looking to sell any non-core assets or anything.
No, absolutely not. And recently, last month, company has done some equity infusion in the company by the promoters and non-promoters. That will also help us in bringing down this debt.
Okay, got that. Anish, just a slightly broader question. Can you take us through how demand is really shaping up? Where are you seeing a bunch of it come from? Is there any slowdown in any sectors that you see right now?
So what we have seen is, in last 7 to 8 months, the steel prices were constantly, they were going down. But in the month of December, the steel prices seem to have bottomed out. And once these are bottomed out, then the demand from our distributors and dealers, the restocking demand, that starts taking place. So Q4 and coming 2 to 3 years, we see a phenomenal growth in our sector, led by the infrastructure push, the private capex, and especially the Jal Jeevan mission by the central government. These will be the major demand drivers for the company and for industry.
So in FY24, if you achieve your sales volume target of 5 lakh tons, what will the top line of the company look like?
Close to 3,000 crores.
Okay, got that.
And you said that private capex is also picking up and the Jal Jeevan mission is also looking good. So can you tell us what is the breakup? How much are you expecting government orders to be as a percentage of your overall revenues? How much would come in through the private route?
So Jal Jeevan mission, I think it will be, it will constitute about 10% of our total sales in FY24. And private capex, along with the demand from the EPC companies, I think this will be almost 20%. And 70% will be our B2C route, which will be through our distributors and dealers across 15 states in India.
Okay, we will let you go on that note. Thanks a lot for joining in. Those are some really optimistic views coming in from High-Tech Pipes. They're looking at a 25% jump in their volumes in FY24. They have a target of 5 lakh tons. They're saying demand is very strong. And they're also looking to become net debt free by FY25. So that's the internal target that they're working with. Let's take a short break. When we come back, we'll have Sunny Agarwal of SBI Securities to talk about the markets and what you can expect through the course of 2023. Stay with us.
फाइनेंस लिमिटेड, आपकी प्रगति का साथी।
टेंशन किस बात की? सेंचुरी एमडीएफ का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहाँ नो टेंशन वहाँ।
Low emission premium plus by Century ProWood.
Suresh.
Yes, brother.
Please take care of it, huh?
Sure, I'll do it.
Really? You're concerned for it even if you're going to the village for just 2 days. But you never think about us this way.
Everything will be fine. My rickshaw union group has taken LIC's group micro-term assurance plan. Wow. Now, no matter what, my family will keep moving forward.
Get LIC's Group Micro Term Assurance Plan. Keep your family secure.
मेरे पिताजी ने ना ये शेयर्स में भी इन्वेस्टमेंट किया।
पीएसएस को फोन लगाओ।
पीएसएस?
ये आपके फिजिकल शेयर्स को डिजिटल करते हैं।
पीएसएस फिजिकल शेयर्स सॉल्यूशन।
जैसा नाम वैसा काम।
ठंडी चाय? हमारे पास बादाम है, किशमिश है, काजू है, अखरोट है। तुम्हारे पास क्या है? मेरे पास सेलो है, गर्मा गर्म चाय।
सेलो वैक्यूम स्टील की थर्मोसील टेक्नोलॉजी रखे गर्म को गर्म और ठंडे को ठंडा 24 घंटे। सेलो वैक्यूम स्टील फ्लास्क।
Retail investors should develop the habit of examining and reviewing their transactions and trading accounts on a periodic basis. Make sure there are no surplus funds lying idle in your account. It is also advisable to insist on regular settlement of your trading account. Smart investors opt for a monthly or quarterly settlement to keep track of both funds and securities. If you notice any discrepancy or error, you need to immediately bring it to the notice of your broker and get satisfactory response within reasonable time. For unresolved issues, contact your nearest NSE Investor Service Cell for assistance.
NSE द्वारा निवेशकों के हित में जारी।
Welcome back. You're still tuned into Trading Hour. There's no respite for the market yet. It is 130 points lower on the Nifty, 0.7% gone. So pretty much at the day's low over there. The mid-cap index is also, seeing pretty sharp cuts right now, 0.9% lower there. And the Nifty bank is faring a tad better, but, a lot of the banks like indices are now under pressure after opening well in the green. So that's what's going on with the frontline indices. What's holding up are some of the pharma names, so those ones doing good. Some of the auto names have seen a recovery from the low, so whether it's Aisha, Hero, Maruti, all of these pretty much at the high point of the day. So that's what's going on with the markets. But let's talk about, where the markets are headed this year and what sectors could really do well. Sunny Agarwal of SBI Securities joins us now to discuss exactly that. Sunny, good morning and thanks for joining us. This is Pavitra and Happy New Year to you and your team. The first question I just want to begin by asking you is about where you see the market headed now. Yes, we did outperform significantly last year. Is this something that you expect can continue going forward as well into 2023?
Yeah. Good morning, Pavitra, and Happy New Year to you, entire team of CNBC. So, in terms of market outlook, so we would not like to hazard a guess where Nifty is heading in 2023. But as of now, the Nifty is trading at 1 year forward PE of 19. And what we feel is that 2023 is the year where you need to find an opportunity in a bottoms-up opportunity in a small cap space. So the companies which are going to post a very good earning growth in a small cap. So we may see a repeat of 2017 where we have seen a handsome rally in small cap companies which has posted a very good number. A case in point, companies where the capacity is expanding at a rapid pace, like CCL product, or for that matter, Safari Industries, where we have seen that capacity is going to double in next 2 years in CCL. In Safari, their new plant has just gone on stream. Or for that matter, a select opportunity in like auto and auto ancillary. So in auto ancillary companies like Lumax Industries, which is going to be one of the key beneficiary of increase in content per vehicle as far as lighting segment is concerned. Or for that matter, companies like Sharda Motors, which is one of the key beneficiary of changes in emission regulation, which is going to get implemented in the month of April. So you need to dig deeper into the as far as market is concerned. So there may be a lot of money making opportunity in a small cap, again, which are one of the leaders in their respective segment. And there we find a very good money making opportunity. As far as broader market is concerned, we feel market will consolidate in a band. And again, within that, maybe a sector like, again, it's a consensus buy as of now, banking. So banking, everyone knows that the credit growth is going to be healthy over next 4 to 6 quarters. So maybe next 2 quarters, NIM will sustain and post that NIM may come under pressure, may come under pressure. So within banking, a mid-cap bank like Federal Bank, IDFC First, where we may see a relatively rapid growth in earning as compared to their large cap peers. So there we may there where lies the money making opportunity.
Just wanted to also talk a little bit, since you spoke about how these mid-cap sectors are doing well, one theme that's playing out is the whole home improvement theme. Once again, it's coming back into action, whether it's Kajaria Ceramics, which is up 3% right now, APL Apollo Tubes is doing pretty well, and then of course you have the real estate guys. In this entire space, what are the stocks that you like for the long term?
So for long term, we would like to stick to the market leaders like Century Ply in the plywood segment, or for that matter, Kajaria within the tiles segment. So as of now, what we have seen is that commentary from the real estate player continues to remain healthy in terms of growth outlook. So we feel that, on the other hand, raw material prices have a little bit softened. So on one hand, the demand continues to remain robust, and on the other hand, the margin pressure is coming off. And what we have seen is that recently there has been a cut in the prices, gas prices by Gujarat Gas in the Morbi sector also. So definitely players like Kajaria, where the feedstock is gas, is going to be one of the key beneficiaries. So in long term, definitely we would like to stick with the market leaders like Century Ply and Kajaria.
Sunny, did you have a look at Radiant Cash Management? That was the new kid on the block. It debuted on Dalal Street. The subscription was very poor, just 53%. Then it sailed through because the company lowered the overall offer for sale, or the overall size of the IPO. But still, they had to, price the issue at 94 rupees, which is at the lower end of their price band of 94 to 99, and the price at which they had allocated to anchor investors as well. But after doing all that, today there is a pretty good response on this Dalal Street. The stock is up, 16%, 109 rupees. Is this a stock that you look at? And what about compared to peers like CMS Info?
Yeah, so again, Radiant Cash, the business continues to remain very good. So in terms of all the financial metrics, if I look at a metric, so whether it is a return ratio or cash flow, so everything continues to remain healthy. Only the concern which the street has on this company during the IPO was that how is the growth that is going to shape up in this industry? So growth is something a concern. One of the aspects is that with the increase in online transaction or UPI transaction, maybe the requirement of refilling the ATMs or shifting cash from one ATM to another, that may reduce. So there is a concern on growth, and that is the reason that we have seen that the response during the IPO was kindly tepid. Maybe going forward, as we start to see a growth numbers from the company, the valuation will definitely, try to catch up based on the earnings going forward.
All right, that is on Radiant Cash. Sunny, do you look at any of these new age tech companies? Of course, they've corrected a lot in price. So at these levels, do you think you'd be comfortable taking a bet on any of them at all?
Definitely these are the good franchises, and they have built a very robust business model. And anyway, companies like Zomato and Paytm, they have guided that over next 4 to 8 quarters, definitely the profit is going to start reflecting in the P&L balance sheet. So we would like to follow wait and watch approach as far as Zomato or Paytm or new age companies is concerned. And once we see signs of profit picking up, then probably we would like to take a bet. Definitely, few of these companies will can be a multi-bagger over the period of 5 to 10 years, because anyway the sector has been consolidated. There are few players who are going to enjoy the expansion in the industry. So, but at the same time, the street would love to see the profit from this company. Then probably we will see valuation start. The street will start assigning a higher valuation multiple.
All right, we will let you go on that note. Thanks a lot for joining in and speaking to us about a variety of sectors, stocks, and the way forward for the market. We'll step into a quick break. When we come back, we'll get you a deep dive on everything you need to know about securitization. This is part of our special series, Fin Street. Stay tuned.
Sa Polymers Limited. IPO of 1 crore 2 lakh equity shares of face value of 10 rupees each with price band of 61 rupees to 65 rupees per share. Offer opens on Friday, December 30, 2022 and closes on Wednesday, January 4, 2023. For risk factors and details, please refer to the offer document available on the websites of SEBI, Pantomath Capital, the book running lead manager and the stock exchanges.
आग को फैलने से रोकना मुश्किल है पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
Why did life test me? Why did it try to crush me, shake me, break me? Why me? Because it knew if I could take this test, I could take anything and say, that was easy.
It's been 23 years of being the nation's most trusted English business news medium.
The channel of choice for India's top business leaders, market mayors and investment experts.
Start your day with CNBC-TV18 to make profitable investments and to stay on top of all news that impacts your finances.
Navigate market shifts with actionable insights and cutting-edge analysis in real time with the biggest market voices.
Wrap the trading day with a head start on tomorrow.
Start your day as the markets open live from the CNBC-TV18 and Motilal Oswal best-in-class studio. And catch the closing bell too. Stay tuned to the CNBC-TV18 and Motilal Oswal studio.
Dabba trading is illegal. It involves high risk and no recourse in case of dispute. Don't take a chance. Invest only in the stock markets. After all, it's your own money.
So much good. Invest defer.
Well, it is only getting worse for the market. There's no other way to report it. The Nifty is barely hanging on to 18,000 now. It's down over 150 points and the pressure really is coming on to a couple of pockets. Banks are interesting because despite a good operational performance in Q3, a lot of banks are under pressure now. We start with Yes Bank, which is topping the charts. RBL Bank is down 3.5%. You have Bank of Baroda, which is under pressure. It just could be sheer profit taking after a good run-up that these banks have had. But there is definitely pressure that you're seeing. Canara Bank as well, after hitting a 52-week high in the last few days, is under a bit of pressure now. So just keep that pocket on your radar. And then you have, something like the metal space that's under pressure. So Vedanta, Hindalco are all down about 3 to 3.5% and volumes are picking up there. There is a lot of trepidation across the global market, so maybe people are just taking profits where they can. On the upside, you do have some pockets that are bucking the trend today. As I said earlier, it's a lot of the home improvement theme stocks that are looking pretty good. So whether it's a Kajaria Ceramics, whether it's an APL, Apollo Tubes, both these stocks are up about 2 to 4%. Angel One is looking good post its business update. Something like an Alkyl Amines, Nykaa is also pulling back a tad bit. But as promised, my colleague Abhishek is standing by the big wall to explain all about securitization as part of our special series, Fin Street. Abhishek, over to you.
Well, in Fin Street today, I am covering securitization and everything that you need to know about securitization. Now, securitization is the conversion of an asset, especially a loan, into marketable securities, typically for the purpose of raising cash by selling them to other lenders. Hence, in India, securitization is an arrangement largely done between NBFC and banks. Generally, banks give loans to NBFCs. Since banks do not have a direct reach to rural customers or customers beyond the large cities, they buy such securitized portfolio from NBFCs. Let's understand securitization in detail. An NBFC, let's say ABC, borrows money from a bank, let's say FGH, on a regular basis. So as per RBI rule, the bank has to meet its priority sector lending targets. Hence, FGH will ask ABC to securitize a part of its eligible portfolio and acquire this. FGH will now hold securitized assets in its balance sheet and bear the credit risk on it. What does this do for ABC is that it provides liquidity by freeing up resources locked up in assets, also offering a lucrative price for such assets which are securitized and transferred. So why does bank do securitization? Banks mostly find it difficult to reach deeper geographies to serve the priority sectors. Manpower and expertise in acquiring and managing such business is also often lacking with the banks. NBFCs typically are well versed with local realities in the region they operate, and they also have a deeper reach within them. Hence, it makes a lot of sense for a bank to acquire loans from NBFC to meet its priority sector lending targets. Now, recent ruling by RBI, let's understand that. Loans with residual maturity of less than 365 days cannot be securitized. Also, the loans must have a 3-month track record of repayment. The impact. So this can have an impact on the securitization volumes, but the quality of loans securitized could improve. Also, shorter duration loans will not get securitized now. The extent of securitization among lenders, M&M Finance, Aavas Fin and Indostar Cap, they have the highest securitized portfolio amongst listed NBFCs, while AU Small Finance Bank, Bajaj Finance and IIFL Finance, they have the securitization level of under 3% of their overall AUM or asset under management.
Abhishek, thanks a lot for getting us that complete explainer on securitization. But with that, we're going to wind down on this edition of Trading Hour with the news that the market is really not looking so good. 0.9% gone on the Nifty. The mid-cap index is only seeing losses widen, so it's over 1% down on the mid-cap index. And the banks also under severe pressure after, a lot of the banking updates did come through. So that's what's going on with the markets. Thanks for tuning in. Halftime report after this short break.